Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the charts behind me, and also this table up here, which is what I use to sell covered calls every week. Very passive way, usually because when the market opens on Monday or the start of the week, this week, Tuesday, I'm at work, and so I can't really be paying attention to the market too close to capitalize the most on selling these calls. So I just kind of go over this table up here over the weekend. I make a new one every single week that just lists all of the stocks basically that I hold more than 100 shares of. And then I can sell covered calls on a weekly basis, occasionally going a couple weeks out. And yeah, just make a little bit of money on the shares that I hold. And for all of them, my average price is above the strike price, so there's very little risk of me actually losing any money. I could always make more money, but there's little risk of me losing money. The only one exception up there that my average price is higher than the strike price is AMC, and so that is probably the most risky one of these, especially because it could squeeze up and then I'd be forced out of my position, which has actually happened before, but I had fewer shares then, and also I do think that the strike for AMC that I have listed up there is pretty conservative based on having been, I believe, a double top before, and I'll go over that in the chart. And yeah, so I'm just going to go over all of these tickers in the list above, and I will include timestamps before. And I'm probably not going to edit this, I'm sorry, but I just wanted to have this out before market opens. And this is, again, something I do every single Monday morning before the market opens. I place these orders because on Friday, the covered calls, they expire pretty much always out of the money, and then I just need to wait for that to clear, and so I can place the order basically during pre-market before the market opens the following week, and then I can place the order and then take a little bit of gains. And right here you can see the number there, that's 0. I do add this up over the course of the week, and I believe last week I made $27 doing this. In December, GameStop was squeezing, I believe, and so I made about $200 in 1 week. And so this is, as you will see, stacking very small gains, and I'm just trying to do it very conservatively, very passively while I'm at work. I can't really be paying attention to this, and this is just a nice way to make a little bit of extra money on the shares that I hold. And basically my philosophy is like a lot of these stocks up here, I've grown very attached to them, and I do want to diamond hand them. I do want to hold them forever. I never want to let them go, but I am not here to fall in love. I am here to make money, and so this is kind of a very passive, easy way for me to make a little bit of extra money on the shares that I hold. And if they do expire in the money, other than AMC, it forces me out of my position in profit. And then, if it dips, then I can buy those shares back. And if it continues higher, then I'm happy for the company, and I move on to the next trade, so no big deal. But yeah, I'm just going to start here, and basically these numbers, I'm actually going to pull it up on my screen. You won't be able to see it, but I just got that table a little bit bigger here, and so you can see my cursor. And let's see, I'm actually going to line my table up with that one, so it kind of looks like I'm pointing at the same thing. Sorry, this is actually, no, that's covering up my cursor. But so anyways, AMC is at the top of the list, so I'll go over that one first, and then I'll just work my way down. And so the ones that are red means, I haven't placed the order. The ones that are yellow for like Biora, I have placed those orders, same with ChargePoint. And so I don't have to worry about those. Hopefully they get filled. Maybe they don't. When they do fill, I turn them green, and then I add to the 0 here, so then that number goes up. I guess I can do a closing of this video at the end of the week to show you how much money I made with this. So I haven't placed these orders. I'm going to do them on my phone. That's what I typically do, but I'm going to go over it on the big screen here so you guys can see it. So yeah, anyways, getting into AMC. So I have at least 700 shares, and I view $11 as a good strike. My average is higher than that, so I don't want to sell at that point. But that is a way for me, as you can see, it says with the limit that is basically I'd sell it for a penny per share, and so that ends up being let's see, $7 minus fees. That ends up being $6.64. So that makes a little bit of money on that. And so the reason why I'm fine with $7, I'll go over that in the chart here. Actually, got to adjust the axis here, is because if we look back, I was covering AMC at this time. We basically had this double top right around $11. So if AMC does start to squeeze, maybe it could get up to $11, but I doubt that the week would close at $11 just because there's so much resistance here. If I throw up the volume profile, I guess it does. I guess that's really the top, so it does look like there's not much resistance up there, but you could just see that double top. There was a lot of selling pressure there. So I do think if price does go up to 11, it won't close the week at 11. So I view that as kind of safe. Also, and the way that I kind of evaluate these strike prices is based on looking up max pain. And so here I've got that for you guys to see, and I'm just going to scroll on my screen. Sorry, I'm not used to doing all this stuff. But so yeah, this is going from maximum-pain.com, looking at options, and here this is AMC with the strike date or maturity coming Friday, February 23rd. And so if I just scroll down, I can see that the max pain for the week is $4.50, so $11, very safe with that. But of course, there is the possibility that it does squeeze, and then I do miss out on having to sell my shares at $11. That would suck. But then I would just wait for a dip and buy back, ideally 30 days later, so I don't get a wash sale. But yeah, so then I just go up to this options tab here in Webull, and so I'm just going to do it so it's only calls, was puts before. And then yeah, so here what we can see in this table is basically the highest strike price is $11, and the bid price is 1 penny, and so that's $1 for contract. And so I'm not going to do it on my computer because I don't really use the computer for trading. I'm just going to do it on my phone here. And so because I have 700 shares of AMC, I can go to the options, select that sell price, and doing it on my phone here. Sorry you can't see it. And I'm just going to do 7 contracts at 1 penny, and so that equals $6.64. I'm going to click sell. And so that order is now placed. When the market opens, that should get filled. And it's quite possible this number will go up a little bit, so maybe I could make more. But if it doesn't go up more, then I'm going to be like watching my phone. I'm going to be checking the markets while at work, and I just can't really be doing that. So this is a nice way. I make $7 and I don't really have to do much. And so yeah, just going back to the chart here, and then next. And I guess, yeah, so that's all of my AMC covered calls. And then I will go over Biora. Biora, unfortunately, only does monthly contracts, so it's not as exciting. I do have a lot of shares of Biora, so I actually do have a number of covered calls that I've already sold, and then also these ones that I've placed. And let's see, I'm just going to pull up that table again in my view. And so, yeah, I don't have to place any for Biora. I've already placed all of them, apparently. And let's see. I might actually, just kind of, I guess I'll just go over the ones that I have either sold already or I'm waiting to sell. And again, all of these are above my average price for Biora, so no risk in me selling shares at a price, lower than my average. And so if I do, first, got to look at max pain, although it's not going to be that useful for Biora. And yeah, so I'll just pull that up here. And so for Biora, this is, a strike date of March 15th, so, a month from now. And if I look at that, it's probably going to be $1. Yeah, so it's $1, and there's really not that much data here, not that exciting. It's, a penny stock, so it's not too crazy, not too interesting. But, you can still make a little bit of money with it, and that's what I'm always trying to do. And so here, if I do look over at the options table, this is for March 15th. As you can see, the bid price for these, that what I would sell them at is $0, and it actually goes in like 5-cent increments. So that's So for each one of these, if it were to get filled at 5 cents, $5 per 100 shares, then I'd make $5. And so I'll just go over the ones that I have placed, so I can share that with you. And so like all of them, basically, I've sold 100 shares for $5. And that's basically just because I've placed the orders like in this table and I just wait for them to get filled. And so currently, I'm just looking at this on my phone, but it is in that table up there. Actually, so I've just got all these windows up, trying to keep it not so cluttered. So for Biora, looking at, the March 15th date, let's see, these are all calls. So let's see, I have sold one, at least one, for $2 and for a strike of $2, and then I'm also planning to sell another one, so I'd make another $5 with that. And if on March 15th the price closes above $2, I then have to get rid of those shares at $2. So it's a little risky in that sense that it's above my average, so I'm not really that concerned. I do believe in the company long term, but I have got a ton of shares, so I'm fine to get rid of some of them at a profit. And so the next one, $3. I don't have any of those contracts, but do plan to sell one, and then $4, same. Then if I, let's see, look up April 19th, I do have a position at the $2.50 and $4 strike. Again, made, $5 in those. So like of these, it's like, I made at least $20 doing this. And then I do plan on selling, one at the $2.50, one at $4, and that's it. Oh, and actually, yeah, selling one at $5. I doubt some of these won't get filled probably, but if there is some volatility in the stock, which it might quite possibly might happen, because it does look like we might have broken out, then these orders will be filled, and yeah, so then maybe I'd make some money with that. And then now going down to the next one, July 19th. I don't know if I mentioned this. April 19th is this one up here, one for April. And then July 19th down here. I do have a position. I'm not selling any in this. Let's see. I'm just going to make sure that that's right. Yeah, I'm not planning on selling any in this. And actually, I will see. Maybe I counted my shares wrong. And so I'm just going to. Oh, yep. I was able to sell one for $2.50 at that strike for this date, which I actually don't necessarily want to do. And actually, I should have checked this before recording this, and so I'm actually going to adjust that because I think that it'll go up to 4, potentially, or at least I could make some money on that. Yeah, so I did place another one for $2.50 here, but not right now because I'm recording this. But I will adjust this to, the $4 strike. And actually, yeah, I'll do that now just so you can see how like easy this is, or at least get a sense of how much time it takes. So I'm just going to my orders on my phone, and I'm just canceling the order that I just placed. And I'm going to adjust it for the strike of $4 for July 19th. And, I doubt, price may be up that high then. Maybe I'd have to exit my position, but I make a good amount of profit on that, so I'd be happy. So, yeah, I'm just going to do another sell, but at $4. Yeah, because if I do it at $2.50, that would fill. And, at 5, with a 5-cent bid price, that's $5. And so I don't really necessarily want that because July is a ways away. I'd rather wait for some volatility. And then with that volatility, I could, get that placed at 4. So yeah, sorry I don't have that in the table, but there it is what it is. And then so next on the list is ChargePoint. It does look like I have 3 placed, and I need to place, looks like 4 more orders. And so before I get into ChargePoint, just going to switch over, leave it in the options table. I am going to pull up Max Payne over here. And actually, this might actually be able to fit in the screen. Yeah, so it doesn't really obscure much, but it does, obscure the screen for me. Actually, yeah, I'm sorry I'm fumbling with this. I'm not used to doing this kind of video. But yeah, ChargePoint here, Max Payne, with the strike for this coming Friday on the 23rd. I scroll down, and Max Payne is $2 for this week. And so if we do flip over to Webull, you can just look at the chart. Yeah, it's price is above $2, so it is quite possible there could be like a gamma squeeze or something. This could start going up. If price does go up this week, it does look like price is down in the pre-market pretty much for all of these other than Luminar. And so I don't think that there's much risk in these going up really high or closing in the money, but it is quite possible that the orders won't get filled. But anyways, looking at that table that I've made, the little Excel spreadsheet, let's see. It does look like I have 3 orders placed, 2 of them for this week. And so that's basically like, and I believe my average is like just under 250. So basically be breaking even if the 250 ones fill. And so I have, let's see, for the 250 strike there, I should have probably just recorded my screen rather than recording these windows. But let's see, the $2.50 strike for this week, and then $3 strike. That's limit is 3 cents and 1 cent. And so as you can see, those orders should get filled right when market opens. Also, I should note too that with the data that I have, the options data that I have, there's a 15-minute delay. So even if I wanted to like actively be placing these when market opens, I wouldn't really be getting live data. There's a 15-minute delay. So that's why I do this all, before the market opens and stuff. But yeah, so anyways, I do have, these placed. I'll make $4 on those most likely. And then for the following week, I'm actually going to move the Chrome window. We can see that for March 1st, let's see, I do have an order placed for $2.50, and so that would get filled, at $5 basically. I make $5 on that one, and then ones that I do need to place still, I've got one for March 1st, so that is this week, and that is at a strike of $3, and so that's at 2 cents. So I make $2 on that. So I'm just going to go over to my phone. Sorry, I'm not sharing this. I just kind of want to be, somewhat private with this. And so I'm just going to look over at March 1st. And yeah, it does look like I've got that order placed there for $2.50. And now I've got one for the strike of $3, placing that to make, $2 on it. Nothing crazy. Then the next one down is for the following week. I'm going out with this just because I guess I have enough shares that I'm, cool to wait. And so this is for the week after that, which is, Friday on March 8th. And for this one, sorry, I just got to pull up that table so I can see it. For March 8th, I want to sell 2 at $2.50. And so that, this is a pretty nice one. I make $30 selling this. This is going to be a good week for me probably. Let's see. Yeah, 3. Yep, okay, I got that one placed for March 1st. Now going over to March 8th and $2.50. I'm going to sell 2 of those and potentially make $30. If it does close, above $2.50, I made $30 and I, then have some more cash on the side after this. So it's all good. Got tons of shares. And then the next one at $3, I would get $7 for that. 7 cents times 100 is $7. So just placing that order. And so that's all set there. And I'm just going to make sure I'm just going to try to sell another one to make sure it be insufficient position. So I can't do that. And and then let's see. Next one on the list is Fisker. They're getting beaten down, because of that YouTube video I shared on the channel. And I think it was Marty. Thanks for sharing that video during the stream. And then so now, I'm just going to look over at Fisker here. It's down, to a new low in the pre-market, but we'll see what it opens at. And so for this one, let's see. I've got a table here. Want to sell 2, for this week, a strike of $1 and a strike of $1.50. I don't want to sell my shares at those prices, but, I have enough shares that I'd be fine trimming, and then I make a little bit of money selling these covered calls. Not a ton, but, and then if I do look over at Max Payne, pull that up here, look over at Fisker, for the maturity closing this week on February 23rd. If I do look at the max pain, that's $1. Really not that interesting for the stocks that are around or below $1. But yeah, I'm just gonna make that go away and pull up Webull here. And so yeah, looking at this, I can go over to the options table and see that for this week, basically for these two, I have so this is actually for the next week out. I've already placed some orders for this. And so on that note, yeah, I'm doing a bad job of this. I'm sorry. I should probably just do this for one ticker at a time. So this is kind of an experiment. I apologize. But yeah, so looking at Fisker. Also, I haven't had coffee or had breakfast. I do this early, while getting ready for work. So I'm not really in my best state of mind doing this. So looking at Fisker for a strike of not this coming Friday, but the Friday after that. Let's see. So go up here and then I adjust this. I guess this is a nice example to show you how to adjust that. Go to March 1st, very quick and easy, adjusts it. It's again $1, so I'm not really too concerned about it closing above my average price, which is below $1. So, man, I keep screwing up the windows here. And so, let's see, making Chrome go away there. And so for this week, for next week, let's see, I can place one for, $4. And that is, oh man, I don't want to sell. I want to, shares. I want to do options. So go over to options table. And it does look like I do have a position with a strike of $1 for this coming Friday. And so if it does close above $1, I have to sell those shares. That sucks, but then I have more money to spend on other things and or buy if there's a dip. And so basically with the $1 strike for next Friday, I can sell one and make $4. Actually, I just got to make sure that it's right for number of them. Yeah, let's see. So I place that. And then 150, so ideally, I'd make some money with that. That is, $1, so not really too exciting for that. Let's see, this is for March 1st, yeah. Okay, yeah, March 1st, yeah, $1 strike. Not a $1.50 strike, I'd make $1. Which is really 93 cents after the 7-cent fee. And then so next I will get to GameStop over here. And so for this, I should look at, because this one has potential to squeeze and stuff, I should look over at the max pain. And also I do need to make sure that this is for, so one of them's for this coming Friday, one of them's for the following Friday. And so if I do flip over to GameStop for a strike of this coming Friday, the 23rd, max pain, it looks like it's $14. So as long as my strike's above 14, I'm probably safe. And also, with this, my average is lower than the strikes that I'm listing, or that I'm placing an order at. So then here, this one for March 1st, next Friday, that's again 14. Did I say it was 14 before for this one? So both of them 14, I believe. Yeah, and so my strikes for both of them, let's see, $25 and $30. So I think I'm pretty safe with them. And so if I do look at this table, so for this coming Friday, the 23rd, it looks like $25 is right here. And so, oops, I'm not actually placing the orders here on the desktop. But yeah, so for 25, it's 2 cents. Yes, I'm potentially make $2 on that. And so I'll just do this on my phone here. And man. All right, and I've already sold a covered call, a strike of $23. And so, I then get, 200 shares back at the end of this week if it closes below $22. And so, yeah, for this one, placing, this is actually $25. Oh, yeah, so I'd make $2 on that. And so, I could go, like more conservative with, you can see the cursor there. Like, I could do it at $22, and that would be, I believe, above my average. I could make $2 on that, but in my experience, the higher strikes tend to get filled faster than the lower strikes, more conservative price. So, I could make $2 on this. I could make $2 on this. I'd rather have a higher strike. And so that's what I'm going to do. So just place an order to sell one, get $2. And then for the following week, I have, let's see, the strike of 30, I believe. Is that what it says? I can't read what you guys can see, but I have to pull it up in another window. Yeah, so for 30, that's should have a bid price of 4 cents. And so with that, I can just do it on my phone. And let's see, oh man, 30, highest one there. Doubt that's going to close in the money, but if it does, I'll make some money, so I'll be fine with that. And then I'll just buy back the shares. No worries. All right, there is that. And so I've got GameStop covered, and from this little spreadsheet that I've got up there, the last one is Luminar, and so I'm doing a strike of $4 from there. And I'm just going to pull up Chrome again and look that up. So is that for this week? I've got to pull up my little thing. That is for actually next week, so I want to adjust this to that week. So it's March 1st, so next Friday. The strike, or the max pain, is $3. So if I have a strike at $4, it's probably not closing in the money. I'll be able to hold on to my shares, make a little bit of money while I hold them. And so here, I'm just going to make Chrome go away again so we can look at this table for Luminar. And I'm going to pull this up for next week at a strike of $4. And let's see, does it say in the table that I make $10 there? Yeah, so I'm going to place that order, on my phone, and yeah, hopefully make some money. I'm sure I'm going to make, I'll do a week wrap up on Friday probably. Actually, it'll probably have to be Saturday because I work late on Friday. So yeah, I'm just going to place an order to sell one covered call, make $10 there. And, possibly got to get rid of my shares at $4, but that's making some money, so it's all good. And, yeah, I also, let's see, should note that I do have I have already sold one covered call with a strike of $4 for, that expires this week. And so that's why I'm doing it like 2 weeks out, because, I just kind of like leapfrogging. If I have more than 100 shares, I just kind of leapfrog them. So every week I make a little bit of money because, if I were to sell a covered call with a strike of $4 for this week, it probably wouldn't get filled. I wouldn't make any money. But then I like leapfrog into the next week, and then I make, $10 there. And then, so for the following week, I would do that again once this Friday closes below $4. And then, I could make a little bit of money here, just $9. So not as exciting. But yeah, I just kind of roll that over into each week. And yeah, so that's basically, my covered call option strategy. Sorry, this video is a little clunky. Hopefully it's helpful, yeah, I will do a follow-up on the weekend so you guys can see how much money I made really just based on this table that's up there. But yeah, if you found this helpful, make sure you like it, and always, share your thoughts in the comments down below. I really appreciate hearing from you guys, and, hopefully this is helpful. Sorry it's long and clunky. I really have a hard time figuring out how to, do kind of lessons like this, without, fumbling and stuff. But, hopefully it's helpful. And of course, make sure you subscribe if you did find it helpful. Thanks a lot for watching. Hope you guys have a great day and week trading. Take care.